In this lesson, I will explain what is a Pip range. A Pip range is a very important topic in trading because it explains to you what is the movement on the trading account, on the trading symbol for a specific time frame. Here on the left side, I have a written article for you if you would like to read more details with an example. The link will be below in the description. And on the right side, I have a trading platform with the EURUSD on the 4-hour time frame, which I will use to explain to you what is a Pip range. It will be easier to understand on the live example by reading also together with this article. Now, what is the Pip range? The Pip range is the number of pips in a certain time frame that the symbol moves. So for example, here I have a EURUSD, which is 4-hour time frame. So each candle here on the chart represents 4 hours. And the Pip range is the change of the price from the maximum to the minimum price in that specific time frame. So whenever you would like to check what is the Pip range for each of these candles, you should check what is the maximum, which is here, and what is the minimum price. So when I go here from this price to this to this price, it says 232, which means 23.2 pips. So this is the Pip range for the EURUSD on the 4-hour time frame for this candle. Here on the left side, you can see inside the article that says the Pip range is the maximum price minus minimum price. So if you have an example of the EURUSD which has 4 decimal point, which is equal to 1.1234, and the price has the minimum 1.1224, then we have a difference of these two. When we subtract them, we get the difference. On the third decimal point, it says 10 pips. So this range, Pip range for this price change is 10 pips. So in this case, remember that many of the brokers have 5 decimal points for the EURUSD. The 5th decimal point in this case would be a pipette. So we do not count them as a pip, but on the 4th decimal point, where currently the number 7 is when the price changed by 1 pip. So when 7 goes to the 8 or 6, it will be changed by 1 pip. A Pip range is defined by the time frame. So in this case, I have a 4-hour time frame. So whenever I check this one from this one, it will be on the 4 time frame. When I go to the daily time frame, this means each candle here represents 1 day. So on this day, which is 29 of May 2024, when I go from the top to the bottom, where there is the lowest price, it says 595, which means 59.5 pips was a Pip range for that day. If I go with my mouse with this arrow here on the close price of this candle, you will get a new window which says you what is the open, what is the high, what is the low, what is the close, and what is the volume. So if you go and check what is the high, which is 1.08595, let me use the calculator, just a minute. Sorry. Here it is 1.08595, 1.08595. This is the one here. Minus low, which means 1.07999. 1.07999 equals to 0.0596. So when I go here from the minimum to the maximum, I should get the same number, 596. It is around 59595. It's very hard for me to correctly put this one, but you understand what is the meaning. The minimum to the maximum is a Pip range. Now, the meaning of a Pip range depends on which time frame you are saying. If you say that the EURUSD has a Pip range of 50 pips, it doesn't represent the correct information. You should include also a time frame. If you say a Pip range for the EURUSD for the 29th of May is 59.6 pips, then the trader will understand that the minimum and the maximum difference between on that day for the EURUSD was 59.6 pips. So this is very important to say also that information. Why is important to have a Pip range on a certain symbol? If you take several candles here to here, for example, if you take 10 or 20 candles on EURUSD, Then you can calculate also what is the average pip range. When you have the average pip range, for example, if it is 50 pips for the Euro USD on a 1 day, which means daily time frame, this means that on average Euro USD during the day moves around 50 pips. So if you are trading, for example, if you would like to open a sell order here, that means you are expecting that the price will move down in this direction. But if it goes against you, this is also bad for you. So where would you put your stop loss? So if the average movement on the daily time frame for the Euro USD is 50 pips, this means that during the day you can expect that the price could move 50 pips up or down, because that is the average. If you predict correctly here, for example, that the price will go down because this is a resistance level, this would mean that you could put your take profit to 50 pips, which means there is a higher probability that the price could reach this take profit in 1 day. If the pip average is 20 pips, it is 200 pips. That means that if you put your take profit at 50 pips, but the price goes 200 pips during the day on average, this will mean that you could reach your target very quickly in 1 day. But also have in mind that this could be also used in the opposite direction, where to put your stop loss. If the 50 pips is the average, if you do not want to be hit on average, you should put your stop loss above 50 pips. So the average pip range is also a very important information for the trader. If they are using on average what is the movement from the minimum to maximum on the daily time frame. The same analogy is for the 4-hour time frame. If you are trading on the 4-hour time frame, it would be nice to understand what is the pip range on average on the 4-hour time frame for the Euro USD. Now here you can have a look here inside the article, a trading session pip range in the Forex. So pip range example during session overlap, so you can see what is the average of this Euro USD. When you go down here, you can see it for the euro against Japanese yen. This would be average daily hour range, and that means what is the average number of pips of the euro Japanese yen during the day. So on the midnight, the average range is around 13 pips. Here, if you take a look on the 17 hours during the day, on average we have a movement of around 30 pips. Why is this information helpful? Because the pip range here tells you when the market is mostly active. During the day it is 10 hours in the morning, and 17 hours at the afternoon is the most volatile time during the day for this pair. And why is that? Because if you take a look here, at 10 o'clock in the morning is when the London session is active, and 17 o'clock later on is when the New York session is active. So that is when most of the traders are active on the market. Now, how to calculate the pip range in Forex? This is the way. You take the minimum and the maximum. In this example for the USD, you can see from the minimum to the maximum, you take a look and check what is the number of pips. What is the average? The average is that you need to take several candles, add them together, and calculate what is the average. So here it is the average, where we take a look: 27.5 plus 14.3 plus 11.3 plus 11.14 plus together, it gives you 4 candles. When you add them, sum them together, divide them with the 4 candles, you get 16.12 pips on average. So this movement here, from here, on average is 16 pips. So as a conclusion, you can see that the pip range depends on the time frame. You have also another article where I have calculated average pip range for each of these currencies. You can see that whenever you click on them, you will see what is the pip range for the USD, GBP, Japanese yen, how much on average they are moving on certain trading session during the day, and also on each day during the week. So this will be a very helpful information. This is all that I have to say about the pip range topic. If you have any questions, feel free to leave a comment. From my side, I would like that you click the like button and subscribe if you like this video. So this is all for this video. See you next time, and happy trading.